Thursday, the 15th of October. This is Frontier Opening Bell. Bosun Omofaye here in Lagos, Agnes Jita or GBS Africa in London, and Chima Okadike from Vertiva Capital Management. Good morning, ladies. It's good to have both of you on the show today. A quick rundown. If you look at the Nigerian market, where it's out on a flattened way, East Africa, the Kenyan market was also negative 0.16%. North Africa seemed to have a better day from Egyptian market to the Moroccan exchange and Tunisia as well. Ivory Coast was much better than Nigeria, 0.29%. Ghana also finished positive, and South Africa was 0.62% in the green territory. Within the East African market, the Kenyan authorities are banning 337 digital money lenders from the credit bureau listing because of misbehavior within the payment system. And Nairobi Ventures is trading on the NSE has been suspended in Kenya because of the companies undergoing restructuring. NCBA in Kenya says it will compensate customers for banking system disruption during the COVID-19, and the first Islamic bank has been signed off in Ethiopia. It's called Zamzam Bank, by the way. I'm sure, Agnes, Islamic finance is becoming the order of the day, is coming up across Africa.
Absolutely, it's interesting to see Ethiopia licensing their first Islamic bank, knowing that the financial market in Ethiopia is usually closed. It hasn't been open to international investment. So this is a way of Ethiopian government really trying to, I guess, diversify sources of financing. And Islamic finance or Gulf investment has been an interest for the East African countries, Kenya, Uganda. In 2018, opened a banking act to try and tap into Islamic finance space. So that's interesting for Ethiopia in a sector that is highly regulated to see this entry of Zamzam Bank. I do hope that it sort of supports financial inclusion and a majority of Ethiopians who are unbanked perhaps will find a Sharia compliant institution appropriate for them to access banking facility. The story on Kenya's banning 337 digital companies because of misbehavior, that has been ongoing. We've seen digital companies taking advantage of government sort of relaxed attention to digital financing, trying also to attract financial inclusion. But we've seen some rogue traders taking advantage of vulnerable consumers. And the central bank has been very clear, saying that anybody who takes advantage will certainly not be allowed to operate in the market. We see them offering loans and charging very high interest rates for the vulnerable, because these people, remember, they cannot access banking facilities, and these digital companies to some extent are not regulated. So the challenge is, how do you encourage financial inclusion? At the same time, how do you ensure that regulation does not affect this? So you really have to try and strike a balance, regulate but protect the consumers. But certainly this is something that has been ongoing. The central bank governor Njoroge a month ago was very clear. There was a big story by the Financial Times highlighting a UK-based fintech that was charging high interest rates and really challenging the borrowers, even going to their relatives or to their churches to demand payment. That was a big story, and so central bank came out and said it is unacceptable. And I think this is as a result. So interesting move, but once, but in saying that, we have to remember that Kenya is very much advanced in terms of digital technology, fintech, and I guess this is just a sign of, you have to regulate the market at the same time, protect consumers.
I completely agree with you, where you have a very strong digital payment system, very strong fintech. Folks would definitely gravitate onto such a platform. Then you find a kind of financial services. You also have Ponzi schemes and all of that. I think the authorities will have a whole lot of work now balancing digital technology, fintech, and all of that, financial inclusion, with those who want to rub off and clean off on investors or or customers or banking community is actually poor and vulnerable people, by the way, who are
Yeah.
not so financially literate, as it were, to understand some of the numbers and how the market really works. Thank you so much, Agnes. Let's check in with the Nigerian markets. We've got our inflation data printing 13.71% for the month of September, higher than 13.22%. Food inflation at 16.66% against 16% in the previous month, and core inflation 10.58% from 10.52% previous. But the G20 story was the big one yesterday, suspending for another 6 months the repayment by developing countries. About 14 billion US dollars was due for repayment at the end of this year. The finance ministers will continue to meet later next month to drill down on this particular story. But let's check in quickly with Chima Okadike at Vetiva Capital. In terms of where the market finished up yesterday, how did we end up flat despite the banking sector, the insurance, commercial, consumer goods, industrial goods went up?
I think that we're beginning to see some correction in terms of some other stocks that may have gained significantly in the past weeks. Remember that we saw the rally which put the SI into the positive up to almost plus 7% in the positive region. But I think we're beginning to see some correction on some other stocks. I think for the telecom sector, which was one of the gainers, we may be seeing some of these stocks, corrected in terms of pricing. Although we must state that while we expect to see potential for continued correction as investors seek to take profits on the stocks that have gained significantly, we may continue to see that some other stocks that are still at low price points, we still believe that they are fundamentally sound, and investors will be able to bargain hunt on these stocks. So we may continue to see some slight positive performance, but we should expect a mixed sentiment to roll over the course of the week.
How strong are you positive about the G20 debt postponement or the extended deadline, Agnes, until June next year? This is good news.
It is certainly, there's been a push by African finance ministers and developing DFIs really pushing for some relief for developing countries. Well, we are trying to manage the impact of COVID-19, focus on healthcare and building the economic infrastructure. So certainly this gives, I hope, our government an opportunity to put their houses in order and an opportunity to be able to at least focus on key sectors, as you say, like healthcare and education. But yes, the IMF has been very supportive, so has been World Bank and pushing governments to try and support our economies to try and so we can focus on important end sectors like healthcare.
You think Nigeria can use some debt relief, debt extension, Chinma? That would be good news, isn't it?
Definitely, I think it's a big good news. I think that it is a welcome news. Given that we had in the beginning we had seen an extension for the end of 2020, and now that it's been extended into 2021, I think that we can definitely use some of this relief that the debt extension has provided. Provided that we're able to make good use of this suspension, use the funds that I've used to pay for these debts into very reasonable and productive and productive uses, such as infrastructure and health and care for Nigerians, so that we can have these multiplier effects and still help to build the economy even at this time.
Okay.
So I think overall it's a very good one for us.
Yes, a good one. Again, the ministers, the G20 will meet again in April next year at the annual meetings of the World Bank and the IMF and see if the 6 months should be extended again by another 6 months to the end of 2021. If that happens, according to the finance minister of Saudi Arabia, who is the current current chairman of the G20. So when they meet again in April, then they will be able to talk about whether they should be extended for a full 2021 that will be a game changer, as it were, for these developing countries, most of them on the African continent. Let's check in with South Africa, Africa's most advanced economy. And the story within the Southern African space is around the new stock exchange being planned in Zimbabwe. The Victoria Falls Stock Exchange will start operating in 10 days' time, and Caledonia Mining is already thinking about listing of that new stock exchange. The Eurobond holders' decision is, I think that will be next week, on with the Zambia. The brick part is still there about the due payment, the rescheduling until April next year, and the Eurobond holder says no, they're not interested in that. Mozambique is doing the $20 billion LNG project, but they want to put up a sovereign wealth fund. And diamonds are still on sale. I'm sure Agnes and Chima will be interested now that the diamond sellers like De Beers have reduced prices. Now they are selling more of diamonds. Ladies, I have some diamonds for you. Let me start with Agnes.
Well, thank you, Boston. I wish I could afford some diamonds. They're apparently girls' best friends. I don't know about that. But maybe going back to the G20 story, and adding to what Chimna has mentioned, I do hope that our governments in developing economies use this opportunity, as I say, to invest in job-creating sectors. At the same time, investing in education. You've seen the unrest across the African continent, Nigeria, a good case. It's purely because of young people having no access to any economic activity. So this extension, I do hope that will help us be able to manage our affairs. And again, just carrying on the conversation about the high interest rate, the risk premium that African and developing economies have to pay on top of their debt. So, these funds that are meant to be focusing on important sectors are used to resurface our debts. South Africa, it's good to see Zimbabwe, despite the ongoing challenges that they are listing a new stock exchange, and companies have confidence they're keen to participate. So that's a good story from Zimbabwe. I mean, Zambia is a story that has been in the news. They've been very bullish, really saying they will pay if they can, and if they cannot, too bad. So we'll see what happens with Zambia. I think the whole story, Boston, is all our economies are struggling. We need to find a model that works for us. And the big thing is debt. How do we pay the people we owe money, and how do we continue to be, because we still need to be able to come back to the market. Zambia needs to be able to come back to the market. We need to be able to reassure investors that we can repay and honor our obligations. It sets a bad precedent, but I guess investors, the Eurobond investors, maybe based on what's been going on, maybe a little bit calm and patient with Zambia, I do hope.
Something has got to be worked out over the next few days or weeks. I know that will happen. On a final note, let's look at the North African a market where the Morocco Stock Exchange was a star performer yesterday. The Moroccan main index, the MASI, was up 1.5%. The FTSE CSE was up 1.22%. The Casablanca ESG 10 index was up 2.33%. But if you look at other stories around Tunisia, as the office Plus, that's a company is paying that's dividend, 294.08 million dirhams as a gross dividend, October 16th. That's tomorrow. If you're investing in Tunisia, I'm sure you already have the notice of dividend payments already. And with the pandemic and the healthcare issues, the special medical in Egypt is acquiring Al Hayat Laboratory, and that is ramping up on virus, vaccine, the equipment, and all that we need to keep safe. Okay, so that's about it for the North African market. Let's give your final take on today's market day for Nigeria, Uchima.
We just got news that inflation data for September is out. Like you said earlier, we saw faster rises in food inflation, so fast rise in food prices, and overall prices from 13.22, we had inflation data in August to 13.71, mainly buoyed by food inflation. We saw it rise by about 16.66%. Earlier in August, it was 16%. And I don't think this is very far-fetched, given that we had seen that the flooding in some areas in Nigeria, in many farmlands and many estates, agricultural estates, had affected food prices. We saw that supply of food had diminished somewhat, and I don't think it's far-fetched that this has filtered into food prices. So I think that many investors will be looking at the inflation data with regards to the fixed income market, and maybe we'll see some investors move from that market into the equity markets, given the dividend yield for some of these stocks, and giving the attractive prices, and giving the positive performance we're seeing on the equity market. So going into the week, like I said earlier, we may still see some profit taking activity, given where stocks have rallied to, but we are also watching out for stocks that are still at low prices, and we think that they will appreciate in this session. So overall, we still expect a mixed session for the rest of the week.
All right. Thank you so much for giving us a bit of a heads up on Thursday and Friday when we're wrapping up. Thank you so much, Chima Okadike from Vetiva Capital. And we appreciate your time as well. Agnes Jita, our partner at GBS Africa in London. Thank both of you. Have a great day and see you next time.